for the invite. Maybe I must have said something right the last year, and you might have done that. But we want to thank God for keeping us during this pandemic.
Yes.
It's it's a privilege to be alive. And I have one song in my heart that has been boiling in my heart. Psalm 92 says, "It is good to give thanks to the Lord,
Yes,
and to sing praises to your name, O Most High." So if I can get the sister, please, you can join me. Just one song.
Yes, sure.
Just one song. No, you're not. No. Yes. The song is simple. It's "Praise the Lord, O my soul, and all that is within me.
Amen.
Bless His holy name."
Amen.
I would have loved to sing this by myself, but I don't want your ears to.
We are good.
So I will join with you, and then it's just.
How does it go?
Bless the Lord,
Oh, my soul, and all that is within me, bless His holy name. Bless the Lord, oh my soul, and all that is within me, bless His holy name. He has done great things. 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 Oh, He has done great things. He has done great things. Bless His holy name. He has done great things. 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 Bless His holy name.
Hallelujah. Thank you, Father, for doing great things in the life of everyone present here. Thank you for your goodness and your mercy. I pray, O Lord, that the words that I share this morning, I pray that you energize them with the power of your Spirit, and that everyone would take something home today in the mighty name of Jesus. Amen. So, thank you again for coming. Thank you for inviting me back. I'm really grateful for the opportunity to share today on properties. I'll be speaking or talking about property investing as a business. But I want us to take my reading from Genesis. I've got just 3 scriptures to share from Genesis 1, verse 22. You can put that up. I'll read it. You don't need to if you don't. So it says, and God blessed them. I'm reading from the New King James Version. I don't know what's on there. And God blessed them and saying, "Be fruitful and multiply, fill the waters in the sea, and let the fowl multiply in the earth." So this is the first thing that God said to mankind: be fruitful and multiply. Let's look at chapter 2, Genesis 2, verse 8. And it reads, "And the Lord God planted a garden eastward in Eden, and there He put man whom He had formed." So He spoke to God. God spoke to man and said, "Be fruitful, multiply, and place man in a garden. This is the genesis of real estate, really. It placed God. So for everyone here to be fruitful, we need to have property that we operate from. Whether it's your workplace or whether it's your home that you return to, we need, for us to be fruitful, we need property. Landed property, it could be a house for any business that you're doing. It doesn't have to be in a physical place, it could be online, but it's a space that belongs to you. And that's why I encourage everyone to invest in property. So I'll just start with the slides. I mean, we're in a pandemic and property prices are still going up. It's kind of you would think that things should be going bad when people are losing jobs. There's a virus going rampant. Yet property prices are going up. So from the slide that I'm going to show, we will just look at why are things going up. Let me just open. Pardon me, let me just get the, I can't see the, just put this through. Go back to that.
Okay, the side, up and down.
What? Pointing towards?
No. It's the arrow up and down.
Yeah, I'm using arrow. All right, so why are property prices rising in the pandemic? I'm not sure if we've all heard of QE, quantitative easing, that's been going on. So basically what they're doing is the Bank of England is pumping money into the economy, which is diluting the currency in circulation. So just imagine that there's £100 in the whole of the UK, and the government print £20. That £20 needs to go somewhere. So it's either going into property, going into commodities, or going into the stock market. Because you will see, I don't know if you've noticed, if you go to the shops now or supermarkets, things are reducing, yet you're paying a bit more for stuff. So what the Bank of England is doing, they're diluting the currency in circulation, which is causing property to rise. If you have property, it's causing the rich to become richer and the poor to become poorer. Because the equity in your house, so if you have a house that you've mortgaged, the value is just increasing. There's been a lot of bounce back loans that they've made. I mean, it was really easy to apply for. People who had business, people that didn't have business were applying for these loans, and they were getting them. People were getting 50K. Some of those money have also been directed into property. Some of those money have been sent back home to Africa or the Caribbean. Some of that money has been used to buy, a lot of Range Rover Sports. You see people driving now. They've taken these loans and they put this back. They've used it. If you're here and you've taken that loan, I hope that you've been in in the side whereby you've invested in property. There's also recovery loans going on right now. That is still ongoing, whereby if you're a business, you can get a loan. So there's a constant surplus of currency in the whole market. There's been furlough payments. They're still paying that. So it's basically paying you to sit at home and do nothing, which is good if there's a pandemic, but it means it's just money that they're just dishing out. Where is this money coming from? It's diluting the currency in circulation. This is making house prices rise. I don't know if you know anyone trying to buy this year, but you get to the market and the properties are going very, very fast. If you're clued up, you would know that money itself is losing value at a very fast rate. There's also a shortage in properties. The government needs to build, or developers need to build at least 100,000 properties every year to match up with the demand. The population of the UK currently is 67 million. And, during this lockdown period, people have been giving birth to loads of babies because they have time to do a lot of stuff. So, all these people need somewhere to live.
Yeah.
They need somewhere to live. The government policies as well. So there's the new 5% deposit scheme, whereby all you need is 5% to buy a property. This is causing the house prices to increase. The Help to Buy is still active. So there's a lot of things fueling the property market. This chart here is a chart of house prices increases in England for this year. So the average for the UK is 10%. So just imagine that you've purchased something maybe last year for 200. You're sitting on 220k already. So you've made 20,000 just by being at home. If you've been in furlough, doing nothing. It didn't grow that much in London because what this COVID cost is for people in flats. They're moving to houses where they have a garden, because that has affected a lot of families whereby they're just in a house, they can't go out, or to the park, they can't go out, and it's caused an exodus from London towards Greater London and outwards. If you've invested in north of England, you would have done very well. It's nearly reaching 15%, as you can see from there. So the chart, the next chart is a chart of the prices of Southeast England. So the average price now for a property is 350k in South of England. This is really, really high. I mean, you go to university, you come out, and what's the average salary? 20,000 or 40,000, and the average price is 350. It's really, really high, but God will make a way for all of us.
Amen.
The next chart is a chart of house prices in northeast England. You can see how the arrow or the chart went up. So the house prices are depressed there. So even if we can't afford to invest in London or Greater London because of the prices, we can move a bit up north, whereby prices are a bit cheaper. So the average price now is about 145 in northeast England. The chart below, with every investment, it goes up and sometimes down. So we must consider this. This is the average price of the UK property now, is 256. But prior, I don't know if we all remember in 2007 when house prices went down. And there was a crash, really. If you can see here, you see how it's going up. And look here, is similar. So there's a possibility that we're reaching the top
A peak.
and it will come down like this. So something to consider. But you might say, oh, I'll wait for that to happen before I invest. You might be wrong, because if you wait and prices begin to come down, what the banks will do is just increase the deposit that you have to pay.
Yeah.
So if you're waiting, you might not then be able to afford the deposit. So I would recommend that one should still go ahead, but try and find a bargain if it's possible. So this chart here is just the inventory of stock in the UK. As you can see, it's been going steadily down. And basic economics is there's less supply and there's more demand, prices will go up. And this is the spike that happened here. So just for us, people saw that there was a lot of property, prices were going up, and they put their property on the market, which caused it to come down again when it was just ridiculous, whereby things will go on the market and within a day or two the property is being offered for. Just a word of advice: it's with the house prices as they are. If you believe you can't afford them, it's true. If you believe that you can afford them, it's also true. It's what you believe. God says, as you believe in your heart, so it is. Even as prices are going high, God will make a way for us. We can press into Him, and He will give us a way out. So, what are the requirements? If you're a first-time buyer, you need a deposit of 5%. If you're trying to get a buy-to-let property, you need a minimum deposit of 20%. Your salary, what they would use. I mean, I will take questions at the end of this, but your salary is to get the maximum amount that the banks will give you is your salary times 4.5. There are some lenders that will do 5.5, and there are some lenders that will do 6% or 6 times your salary. On a buy-to-let, there is no minimum income. If you have your deposit, you can buy any property if the rental income matches up. If you're a contractor, it's your day rate times 5 days times 46 or 48 weeks, depending on the lender. If you're self-employed, you would need 2 years of SA 302s and overview. Some banks will allow you to use 1 year SA 302s. If you've got bad credit, it's not the end of the world. There are lenders out there who are a bit flexible and would also consider you. So the deal up there, or the chat there, is if you're a young professional, you're a solicitor, doctor, dentist, or accountant, there's some lenders that will let you, as I said, let you do 6 times your salary. But you do require 15%, which is a bit higher than normal. If you work in the emergency services, armed forces, or education, so if you're an NHS person, they can do 5 times your salary, and you only require 10% to get this kind of mortgage. So this is a chat of how the Help to Buy scheme works. So, for example, if a property price is 200, all you need to put down as a first-time buyer using the Help to Buy scheme is 10,000, which is 5%. The government will loan you the 20%. In this example, is 40K, and the mortgage company would give you a mortgage of 150,000. So it's simple. If you see any Help to Buy properties out there, this is what you need to be just looking at. So far, you have 5% of the property value. You can buy that property. The new scheme, whereby you just put 5% down, It's a new government scheme. This really only protects the lenders, because what the government would do is, God forbid, if you buy using this scheme and you can't pay off, the government will pay the banks 15% of the outstanding loan and then sell the property off. So though all you need is 5%, it's really benefiting the banks rather than you. But at least you need to put 5% down. It's available for first-time buyers and second-time buyers. You don't need to be. You can go up to 600,000 K. Although it's fixed for 5% and it's not for buy-to-let properties. So raising the deposits, which is always a big issue, when you want to buy a property, loads of us can afford the rent, and even the rent sometimes is more expensive than the mortgage, but the deposit is the issue. Where do you get the deposit from? I would say, you can use credit cards. You can arrange it in such a way whereby you get the seller to give you a deposit. And some banks will accept that. But it's a bit tricky. It's not that straightforward. You can use your savings as well. But saving, as I said, is very slow. And it's very, there's always emergencies that will come up. And I can't try and take that savings away. There's gifted deposits. If you have any rich uncles, aunties that can gift you money, you can get that, or you can get a personal loan. Credit rating. Credit rating. So, just something to know. We live in a credit-based economy. You would think that if you don't have any credit cards, that your score would be high. Well, that's not the case. You have to use credit to improve your credit rating. So, register to vote, check your file regularly, to improve your credit rating. Try and maybe spend 30% on your credit limits or on your credit card and pay it back immediately after at the end of the month. Limit the use of overdrafts and avoid making too many financial applications at the same time. If you have a default or CCJ, try and pay that off as well, if at all possible. So I put here, why invest in property? Really, for cash flow, we get our monthly salary, we get paid monthly. If you're renting out a property, you get paid monthly as well. If you're investing with a company, I'll come to that in a bit, using a limited company, you get tax breaks. It's a way to, as I said in the beginning, capital appreciation. Prices have gone up 10% on average this month, or this year. So if you have a property of that is what, 200,000, you're £20,000 better. That's the reasons why I believe one should invest in property. You can also diversify your portfolio if you have a business that you're running. Every company has a property portfolio. If you look at, take for example, McDonald's, you won't. There's no way, you're not sure if is it burgers that they sell, but are they into real estate? Because everywhere you see McDonald's, it's in a prime location. Yeah. So they have value from what they're selling, but they also have value from the land where they are. So which one is it? Is it burgers or is it real estate? And it could be both. HSBC, they're in Canary Wharf. That's what you see. That's how you see them. Google, where are they now? They're in Houston, or is it King's Cross? So every company that is doing well, and this points to what I said in the beginning. God said to be fruitful and multiply. But to be fruitful and to multiply, you need property. God placed Adam and Eve in the garden, and that is real estate. It's leverage as well. So if you're buying a property, you're not putting the full amount down. You're putting a percentage of it down and gaining exposure to increases. It's an inflation hedge as well. So while things are getting more expensive, you can just easily raise money from your property. There's low interest rates. If you have £100,000 and you put it in the bank, how much would you be getting at the end of the year? Not up to £1,000. Yet if you take that same money and invest it, you can get a lot more. House prices and rent also double every 10 to 12 years. So something to consider. I came across this. There was an article in Bloomberg, and this is, I put here, Black Lives Matter. So for black families, only 30% of us are homeowners. Property inheritance. So you take out mortgage, what is left? On average, white families take home 3K if someone dies in the family. Black Caribbeans, you guys, take home 7, 8. Us Africans, on average, is £1.
Wow.
It's £1. So you can check this. It's on Bloomberg. So and this I got that from the site. Yeah. So this the median value or average value of black family property wealth is 0.
Inheritance.
So does Black Lives Matter? When we protest on the streets, if we don't have economic power, it's just noise. If we don't have something to, the Jews, if they make an announcement, the government listens. So all that rubbish about kneeling down in football games and stuff like that, it doesn't amount to anything. It's just, they're just doing it for media and to pacify the anger of the black people. Really, for our lives to really matter, we need to be investing, we need to have economic power. This here is, this is from the past decade. I was talking about how equity increased. For the past decades, the Indians are on top of their game. They're equal to the white people, the people that own the land. They're on the same path. So they are about 300K over the last 10 years. This is how much they've made in equity. This other white, so you can say Polish, all the Eastern Europeans, they're doing better. So they're over 10 years, they have equity of 100K plus. Black Caribbean, you guys are doing well. Just under 100K. But look at where black Africans are. At the bottom. And that's why, as black people, I encourage us to invest in property, but we need to also teach people, our people, how to do it. Because, never feel like you're a victim, no matter where you are in life. And that's what they want us to believe. That, okay, we are victims of, racism and stuff like that. Yes, I do agree that the system is, the system is designed. Yes, but the Indians came here as well. How did they do it? They took all the abuse, and yet they were invested. And now they're on top. So you can't really say, you can't say much. I mean, who's our foreign secretary? It's an Indian person or Indian origin. They have the money to do what they need to do, but we're lagging behind. Okay, so investing in buy-to-let. I put here, decide the structure. You can invest as a individual or a limited company. I would encourage us, if you're going to go into it, to use a limited company, because it's easier to pass that on to your children. Because if you invest as an individual, 10, 50 years from now, when you pass away, the tax is designed, your children will pay 40% tax, inheritance tax. So is designed to take that back. So everything that you invest, the system, so you need to know how to play the system. It also depends, sometimes you might need to invest as an individual. There's circumstances whereby that is, possible, or whereby say you're married and maybe the wife is not working, you can get that income and, that one property can be in that person's name or in both of their names, and that person just takes all the income. So you can do it, you can structure it in such a way that you tell HMRC that though we've bought this together, my wife is actually taking the whole amount. Or if you buy with your child or a partner. It also depends on how much buy-to-let properties that you want to buy. How long are you planning to hold them for? There are additional costs if you buy as a limited company. You have to employ an accountant because you need to file your tax. I'm not sure you can do it yourself because it's a limited company. So you need to engage the services of an accountant. You also lose capital gains tax, which you get as an individual. But what you gain is anytime you buy with a limited company, you can actually take money, loan that money to your company, because you and the company are two entities. You can loan that money to your company, and in the future, you can draw that money out, tax-free.
Okay.
Or you can use that money, you can multiply that money, use it to buy other properties. If you can't buy alone and you're a group, this would be ideal for husband and wife or twins, since we have twins in our midst, to buy a property together. As a limited company, you can buy stuff together if you don't have the income to buy by yourself. If you both have good credit, you can buy something together. So as I said, with every venture or with every investment, there are risks and rewards. So it's not always easy. I've invested whereby I had to supplement the mortgage payments with my salary. Don't let anyone tell you that, it's easy. You have to deal with tenants. It's with like any investment. It goes up. It can, over this period, the government did a no eviction order whereby you couldn't evict a tenant. If you didn't have insurance and that was in place, and there were some tenants that had the money and they just used that opportunity not to pay. So it's possible that there's some downturns, but I think if you do your homework well, there is benefits in investing. What options do you have? Saving is not great because it's been eroded by inflation anyway. So I'm concentrating now on why run a property business. So a property business really is if you want to start buying as buy-to-let. It can give you independence. There's a lot of financial rewards. As I said before, you can pass down generational wealth to your family, to your children, or to whoever you choose to. There's financial freedom as well. If you're on a 9 to 5, your wages is taxed the highest. The government can just wake up tomorrow and say, we're changing the tax rate. If you're in a property business, you take all your expenses out, what is left is what you pay the government. So even if you don't invest in property, whatever you invest in is beneficial. Even if it's buying something on eBay or in the car boot sale and selling it online. On my way here, my wife was just telling me she bought a box in the car boot sale for £2. She sold it on eBay for £40, and she just sold this morning. So there are ways whereby you can maximize what you're earning, even if you don't have that deposit down. But try and think like a billionaire would think, because that's the only difference. A billionaire started from somewhere. Someone in that person's family started to invest, or they stole money, but they started somewhere.
Yeah.
So I don't know if we're all familiar. If you're a contractor, you know about the IR35. Really, it's just a way of the system trying to suppress people that have got freedom. There's a lot of black people that are contractors. We take more risk. And if they look at the thing and think, oh, who are the people making money? All they have to do, and they just put out a policy, IR35, you can't, what you normally used to claim before, you can't claim. Now, so so even if you don't invest in property, invest in a business. And it doesn't have to be something that, okay, will bring you thousands. Even if it's £100 a month, it's something that you have control over.
Exactly.
And you determine you determine exactly how you pay tax, or if you choose not to. This here, I would concentrate. So I've asked the question, what is money? In my opinion, money really is an exchange for your labor. But imagine if you don't have work, how long can you sustain yourself for? Money is a medium of exchange. Wealthy people don't work for money. They don't. If they work for money, if they work, they choose to work. And that's how God designed it. Because when God placed Adam and Eve in the garden, there was no money. There was gold there, but they worked. But it's not like they were working for money. Everything was there. The idea, every course that we do, every educational program that we do is designed for us to look for a job. We need to change how we think and how we look at money. Because you can be rich and not wealthy. If you're earning £100,000 or £1,000 a day, I would consider that person rich, right? But what if that contract stops? How do you sustain yourself?
Yeah.
Yes, you could be earning £25,000 a year and be wealthy, because your expenses in a year could be £12,000. If you're not working and your money is working for you and it's bringing you £25,000, you're wealthy.
Yeah.
And that's a big difference that we need to change how we think. In my opinion, there's only two classes. You're either in a labor class or a capitalist class. What you want to do is you want to be in a capitalist class, whereby, and it doesn't, to be in a capitalist class, you don't need like millions. All you need to do is, how much do I need to sustain me for the year? And then get money to do that for you. So the question is, you need to ask yourself, are you working for money, or is money working for you? So I've brought this down to what you need for the property side business. So for any business that you do, it applies to property as well. So you need seed capital, your deposits. Who is your employee? It's the property that you buy, which is the land. Who is your client? Is your tenant. So you look after your tenant. The cost of running your business is your mortgage. Your profit is your rent minus your mortgage cost. Any business on the face of the earth, all these things need to be there. So, take for example, I go to the cargo sale. I buy something. I've taken cash. The cost of getting there, that is, who is the employee really? It's yourself. So you're the employee. So you need to find, whatever business you do, you need to have someone or have something doing the work for you while you're sleeping. This employee, the property, it works for you 24/7. It doesn't sleep. So your money is really working hard for you.
Yeah.
It doesn't complain. But to sustain that employee, you need to keep your tenant happy. Because you're providing, the service you're providing is accommodation. And the accommodation business is a good business. I will just read something out. If I have it here. Oh, I don't have it here. So, I can't remember. There were like 3 billion people on planet Earth some years back. Now, we have 6 billion or 7 billion people. In some years' time, it's going to be 10. So just think of it as providing a service to people that need property. Real estate is going to go higher because people need somewhere to live. So this here is what we need to do when we. So I don't know if we've all heard about zero. You don't need any money to buy a property, or 0% deals, whereby you don't put anything down. Basically, you still need some money, but that money will work for you, and I'll explain it here, and I'll show you a real example. So let's assume you find a property for 100K, but that same property you can, is run down. You can buy it for 70. It doesn't always come up because what I'm teaching you, a lot of people know as well. So they're looking for the same thing that you're looking for. So this is where we need the favor of God to go with us. If you find a property for 70K, to buy that property, you don't actually need a deposit in a sense, because this is on the assumption that you have a property already that you live in, and you have some equity. So you can buy by a bridging loan, whereby they give you a loan, a bank will give you a loan saying, okay, you can buy this property, this is this value. All you need to put down is 25% of 70K. There's a reservation for 5K, so that is where I got 25K from. You can go, if you don't want to do it this way, using the loan, you can do a second charge on your property, whereby a bank will put a charge on your property to get that 70K out. You then use that 70K as cash. You buy the property cash. You renovate for 5,000, for example. So the total money invested could be either 25 if you go with the first option, or 75 if you go for the second option. If you then go, you've added value to the property, you then go to the bank and say, look, I've done so ABS. This property is worth 100,000. Then get a mortgage for 75,000. Really, everything that you put in is out already. So money back. So you have zero money tied up in the property, and yet you have rental income on the property. So this is how rich people get rich. It's just as easy as that. So here, now they have monthly income coming in every month, and none of their money is in the property. And this is how the rich get richer. You'll be surprised. Amazon, Facebook, they have loans up to $18 billion. These people make money every day, yet they have loans. They're using the same system to make more money for themselves. And this is where we need to get to, whereby, but it can be done on a small scale, which is what I did myself. So I put the question here: how long does it take to save 50K? And how long does it take to borrow 55 or 50K? The first one takes long. It takes, how long would it take to save that? Yet, last year, bounce back loans, you can get it within a day. The problem we have is a lot of people got 50K, yet they did not know what to do.
Range Rover Sports.
This is a real life example. I bought a studio flat at an auction for 52K. I spent 5,000 to renovate it, and it was revalued 5-6 months later. They gave me a mortgage of 65. So I got my £52,000 out, plus the 5,000 I spent, plus some change. My mortgage is 165, and I get a rental income of, I get rental income of 600. And that would give me money. Now that the prices have increased as well, so now it's 100,000. Not valued because this is, it was revalued, but now the property is valued at 100,000.
Gone up, yeah.
So now I can go back to that property, try and raise some more money, and repeat the process.
Buy another one, yeah.
And buy another one. So it's just to change your mindset. You might not have access to this, but 52,000 really is not a lot of money. If I tell you today that if you can raise 52,000, I'll give you 100,000 in 6 months. Everybody here would raise that. You will know where to go to get that money. But this is an investment. This is a risk, so it has to be calculated. So change your mindset about savings. Saving is not. It's a good discipline, but the government are diluting the money, and you will not hear it on the news and say, "Oh, go and invest." They will advise you to save. That save harder. You can get on the property market, but it's a lie because things are going. I go into the supermarket. You see that the packaging is the same. The content has reduced.
Yes.
It's called shrinkflation.
It's everything.
Yeah. So things that we're buying, we take, you go to the supermarket, you spend £30, but what you're getting back is just reducing. The inflation is eating up our savings. Big time. Here, I've used an average of a 2-bedroom house. So this is how to value a property. If you see any property, you see the rental. So let's say the rental is £1,000. What you want to do is times that by 2. That makes it 2,000, and then put a 0 at the end. That's what you should be aiming for. To get the 0.5 rental stuff. So everything you see. So if you see a property that is, this is the way to analyze if you're getting a good deal or not. So if you you can go to Rightmove, look at how much they rent property in a particular area. So you go to Rightmove, say for example, this area, a 1 bed is £100 or £1,000. How much do they rent property around here?
It's quite high now.
It's quite high.
So a 2-bedroom flat probably about 1,250, 1,300.
So what you want to do is double that and then put a 0 at the end. So here I've used 120 or 1,200 for a property in Kent for rental. So what you want to do is plus 2 times 2 and then 0. That will get you here.
204,000.
That's what you should aim for. It's not always possible, especially in a rising market like this. So you want to at least get 0.5%. Yeah? So if you're using this strategy and you you invest as an individual, so for this, the rental income per annum will be 14,400. Using a limited company, I've used 3.5. It can be something else. So your mortgage will be 525. Yeah. Your profits per annum is 8,100. If you use a sole user individual, you will get your profit will be 11,148. So really, all you need to be financially free, if your salary is 26 per average, all you need is 26 divided by 8. And you're free financially. Because you just need to do the process. If you can use the strategy that I did before, whereby you're putting 0% down, it's not always easy because there's a lot of people chasing that. But assuming you do that and you repeat that process or something like this, all you need is times 5. So if you have 5 of this, your income is 5,000.
Yeah, every year.
Every year. If you're as a limited company, it's 40K. You're earning over, this is the average salary last year, 26. So if you have 5 properties, you're nearly double that. As I said, all you need to do is wait for 7 to 12 years. The value of that property will have gone up. And this is what the rich use to get richer. And this is how they suppress poor people. Using this here. I'll put here, slow and steady wins the race. You could, even if it's one property every 2 years, because if you're starting out, it could be hard. But if you're starting out, even if it's that, after 10 years, you're okay. I mean, it's hard. I mean, if you look, highest earning job, pilot, and 2,000. So really, if you have 10 properties, you're earning more than a pilot. So that is my number, and I'll take questions. I have a few more slides to go. I don't know, how long have I spent?